Welcome to Financial Headwinds, a report by RWK Goodman where we explore the state of the banking and finance industry today. We sat down with key stakeholders in the banking industry and discussed the lending behaviours of the high street bank versus the emerging challenger banks.
Do we know what sort of percentage of lending the high street banks are now doing compared to everyone else?
You know, you've only got to talk to the market. I spend my life talking to entrepreneurs. I spend my life talking to private equity, to accountants, to lawyers. And unfortunately, you just don't hear good things about the high streets. We know that. I'd say that we compete with different lenders for different transactions. You know, there's a few lenders on the real estate side that are fantastic and we see them regularly and we have a lot of respect for them. There's a few of the debt funds on the corporate side that are great. As I say, I don't really compete against the high street lenders, and it happens in every single cycle. We see it, and if you look back probably over the last 6 cycles, they run for the hills. They stop lending. The messages that come down from the top that filter down are really delayed and tough, and no one really on the ground knows the strategy of what's discussed in the boardroom. If I'm honest, we don't really compete against the high street.
The high street banks say that they're lending in the KM sector, but it's probably not what we're experiencing.
They are, but the margin, the percentages are very low. Yeah. They're looking to lend 50-55%. Then new entrants cannot have that kind of deposit.
So we've seen an explosion of lenders and funding options in recent years. What does that mean, do you think, for the 4 main banks in the UK?
See, that could be, in recent past we have seen failure of a few banks in US as well as we have seen in Europe also.
Yeah. And do you think it'll make them more cautious, I suppose, because they want to learn the lessons from other banks?
You have to learn it from others' mistake.
What is the borrower's perspective on lending options right now? Sukhi Gidar of Gold Care Homes shares his insights.
So, having spoken to a few other operators and also in the hotel sector, the alternate banks are lending, their lending criteria is a lot softer. They're lending to people rather than valuations, albeit the cost of borrowing is high, but it is readily available. I think one of the challenges that they'll face is new entrants into the market, who will look to their regular clients and make, probably the cost of borrowing will be higher, but they will make funds available quicker so that deals can happen quicker, just bring liquidity back into the market.
Fintechs are fast becoming important lenders in the banking industry. Sudhir Sharma at State Bank of India reflects on their rise.
Another competition which we are facing now from the fintechs. So banks like Monjo, Revolut, Starling Bank. So they have, they don't have a physical presence, but still they reach out, and the personal segment they are, catching up very fast.
For lenders, Adam Bovingdon at United Trust Bank discusses the current outlook on lending and the more selective approach to funding.
I mean, in terms of how we found this year, I would say there's certainly been a degree or a need for us to pause and that's not in our lending, but almost just kind of take into account what some of these implications may have on future schemes that we're funding. So we've remained open for business. We still continue to fund developers up to 65% loan to GDV, which actually is sort of the top of our lending appetite. We are undoubtedly more selective over those that we're lending to. We want to ensure that those developers are capable of withstanding future inflationary pressure, future interest rate rises. All of those things we think are important.
For more on challenger banks and alternative lenders, read our Financial Headwinds report.